In the early 17th century, investors believed they had discovered something revolutionary. A company so powerful, so profitable, and so deeply connected to the state that failure seemed impossible. It dominated global trade. It paid steady dividends. It reshaped the world economy. Investors poured their savings into it. They believed it was too big to fail. They were wrong. This is the story of the Dutch East India Company, the first stock market giant, and how it pioneered modern capitalism before collapsing under the weight of its own success. When we talk about stock markets, corporations, and global finance today, we tend to think of them as modern inventions. But almost everything we associate with capitalism, shares, dividends, speculation, corporate debt, bubbles, corruption, and collapse, was already happening over 400 years ago. The Dutch East India Company, or VOC, was not just a trading firm. It was the prototype for the modern corporation. And its rise and fall offers a warning that still applies to global markets today. Chapter 1. A world before stock markets. Before the VOC, long-distance trade was incredibly risky. A single voyage to Asia could take years. Ships could be lost to storms, disease, pirates, or war. If a voyage failed, investors lost everything. Because of this risk, trade was financed voyage by voyage. You invested in one ship, not in a company. When the voyage ended, the partnership dissolved. This limited scale. No single merchant could afford sustained global expansion. The Dutch Republic needed something new. Chapter 2. The birth of the VOC. In 1602, the Dutch government made a radical decision. It merged several competing trading companies into one giant enterprise, the Verenigde Oostindische Compagnie. The VOC was granted a 21-year monopoly on Asian trade, the right to wage war, the right to build forts, the right to sign treaties, the right to govern territories. But the most revolutionary innovation wasn't military, it was financial. For the first time in history, the VOC issued permanent shares. Investors didn't fund a single voyage. They bought ownership in the company itself, and they could sell those shares to others. The stock market was born. Chapter 3. The Amsterdam Stock Exchange. Almost overnight, Amsterdam became the financial center of the world. Investors gathered daily to trade VOC shares. Prices fluctuated based on news from Asia, expected spice shipments, wars and treaties, rumors and speculation. This was capitalism in real time. Short selling emerged. Speculation flourished. Market manipulation appeared. Sound familiar? The VOC wasn't just a company, it was an economic experiment, and it was working. Chapter 4. Early shareholders and dividends. For decades, the VOC delivered exactly what investors wanted. Profits were enormous. Dividends were paid not just in cash, but in spices. Some investors received returns of over 18% per year, extraordinary for the time. This created immense public trust. The VOC became a cornerstone of Dutch society. Pension funds, widows, merchants, and craftsmen all invested. Ownership was widespread, so was complacency. Chapter 5. The illusion of permanent growth. As profits flowed, expectations changed. The VOC was no longer judged on performance. It was judged on continuity. Investors assumed dividends would never stop. Trade dominance was permanent. State support guaranteed survival. But beneath the surface, cracks were forming. The VOC was expanding faster than it could manage, and growth came at a cost. Chapter 6. Corruption becomes systemic. The VOC operated thousands of kilometers from oversight. Officials in Asia controlled trade contracts, military forces, local governance. Corruption flourished. Bribes became normal. Private trading became widespread. Company resources were abused for personal gain. Executives enriched themselves. Costs exploded. Profits stagnated. But shareholders didn't see it yet. Chapter 7. Debt, the silent killer. To maintain dividends, the VOC turned to borrowing. Massive borrowing. Instead of reducing payouts, the company issued bonds. Debt replaced profit. By the mid-18th century, the VOC was drowning in liabilities. Interest payments consumed revenue. The company survived, but only on paper. Chapter 8. Competition and global change. The world was changing. The British East India Company rose, smuggling broke monopolies. Spice prices fell. The VOC's business model, built on exclusivity and violence, became obsolete. But reform was slow. The company was too large to adapt quickly. Chapter 9. Collapse. By the 1790s, the VOC was effectively bankrupt. Ships rotted in harbour. Employees went unpaid. Debts spiraled. In 1799, the Dutch government dissolved the VOC. Its assets were seized. Its debts were nationalised. Investors lost confidence. The world's first stock giant was gone. Chapter 10. What the VOC left behind. The VOC created the modern corporation, stock exchanges, shareholder capitalism. But it also revealed capitalism's dangers: moral hazard, information asymmetry, corporate state entanglement. The systems we use today were shaped by its failure. The VOC didn't collapse because trade failed. It collapsed because unchecked power met unchecked greed. It reminds us that markets are human systems, and no company, no matter how large, is immune to collapse. If you value deep, factual stories about the forces that shaped our world, consider subscribing. More long-form explorations of power, money, and history are coming.